This will probably be my most controversial video ever. So here it is, my friends. Fundamental analysis of stocks. Is it a good way to choose how to invest in stocks anymore? It's very traditional. And basically, as you see here from Investopedia, I'll be including the reference to all the websites that we do here to give credit where credit is due. So fundamental analysis is a method of determining a stock's real or fair value. This appeals to people who are very analytical, who are very logical. So certain things that people would look at are a company's revenues. Makes sense. How much money are they bringing in? And then the earnings from those revenues. The potential for future growth. Makes sense. The return on equity, again, very logical. Profit margins, sounds reasonable. And then, other data. We could go on and on and on, but you get the idea. We're looking at the company. These are the kinds of criteria that you would use if you owned a small business. Okay, how much am I bringing in? How much is going out? Income versus outflow. Income versus expenses, balance sheets, all that sort of thing. So let's consider something not brand new, but relatively new that a lot of investors do not consider in fundamental analysis. And there are several of them, but today we're only going to focus on one really, and that is ESG. So the acronym is environment. That's what E is. And then S is social. In fact, let's go back up here real quick. So E is environment. So you can see here, we'll just look at, it can pay to avoid companies with poor records on the environment, the thinking goes, because they may be at greater risk of big fines from regulators. Okay. Number two, S. What is S in ESG? S is social. This is a wide-ranging category that focuses on a company's relationships with people, both within and outside. And as it says, it's wide-ranging. So if we look down here at this paragraph, then you can see increasingly companies are also getting called upon to take positions on big social issues. This is where a lot of the controversy is, such as abortion, Black Lives Matter movement. Some ESG investors encourage this, saying companies, employees, and customers want to hear it. All right, well, that's controversial, right? You could say, oh, those are great things. Some people say, yes, that's great. We need to encourage that. Other people, they won't. They say, hey, wait, I'm just concerned about the company's profitability. But argument can also be made that a company's profitability could be associated with its social stances in the culture today. And then G stands for governance, which essentially means the company is running itself well. And it includes a lot of things. Again, we're just going to give a small little overview here. I'm not going to spend too much time about that. But independent directors on the board to act as a powerful check on CEOs. So taking away some power from the CEO and having, as it says there, executives pay, tying executives pay to the company's performance, whether it's defined by the stock price, profits, or something else. Again, we know there's been abuses with CEOs' pay, a lot of controversy over that. So again, maybe not a bad thing. But the question is, does that as an investor, because that's what we're talking about today, you as an investor, is this something that you want calculated into the price of the stock of the company that you're evaluating? So now let's head over to the Harvard Business Review. As an investor, you want a good return on your money, obviously. And so the question, actually, let me go back up here because this goes back to, let's get our dates in here as well. Let's be responsible. So December 2021. Assets under management at the Global Exchange Traded Sustainable Funds that publicly set environmental, social, and governance, ESG, investment objectives. Okay, gives this numbers there. Now, how have investors fared? And that's our question for today. How does this affect investors? Well, according to this report, not so well. not so well. To begin with, the ESG funds certainly perform poorly in financial terms. And this is based, as you can see, a recent Journal of Finance paper. University of Chicago research analyzed the Morningstar sustainable ratings, et cetera, et cetera. Okay, so now that raises another question. Well, that might be expected, and it's possible that investors would be happy to sacrifice financial returns in exchange for better ESG performance. How do you feel about that? Are you willing to sacrifice? And I'm not giving you the answer, right? There are people who are willing to do that, and good-hearted people who really care about social important issues, and perhaps you're one of those. I'm very interested for you to put your comments in the comment section below. But then there's another problem, and that is that the research at Columbia University in London School of Economics. Okay, let's just go down here. In fact, we can go all the way down here. They also found that companies that added to ESG portfolios did not subsequently improve compliance with labor or environmental regulations. So wait a minute. You might have good intentions, but is it really, really helping? Well, here's one study that says, at least at that time, no. Now let's go to Larry Fink, who has been involved in a lot of controversy lately. He is the head of BlackRock, which is the largest fund manager in the world. And again, you can see the URLs up here. I'm just giving you little tidbits here, so I want to be very clear about that. I encourage you to go read the entire article, all these articles, get the complete context and so forth. And I'm not telling you what to think, but I'm just sharing part of these articles here, so you can go and search it out for yourself. And let's see, this goes back to 2015. So again, Larry Fink, BlackRock, says, chastise managers for returning too much money to their investors in dividends and buybacks. Then, 3 years later, in a 2018 letter, he went a step further, advocating that CEOs step away from traditional shareholder capitalism and toward ESG by embracing the idea of stakeholders. Now, what does that mean? And here's where it gets very, very, very interesting. So, and here he says, well, this is how the author of this article translates it. Allow me to translate. On behalf of millions of shareholders I've never met, I declare that they no longer truly own the companies they have invested in. Society does. Now, again, those are not Larry Fink's words. I want to be very clear about that. That's how this author is interpreting them or translating them. If that's true, then that very much contradicts what we've all been taught about owning a stock, where you own a part of the company. And basically, it could be interpreted that maybe that's not any longer how companies or stocks are seen. And indeed, when you integrate ESG as well as, there's other things than ESG as well. There's DEI, there's CEI, there's all these social programs that are put upon companies, and a lot of funding comes through those social initiatives, funding. We're seeing things like this, not just in the boardroom and not just in reports from companies, but we're seeing it in our stores. We're seeing it in commercials and so forth. So I'm sure you've heard of this already. The Bud Light commercial that came out recently. And it was a sponsorship of an Instagram post by a transgender woman and set off a firestorm of anti-trans backlash and calls for a boycott. And people on both sides actually got upset about this. So again, diversity, I can't, not speaking for any particular group of people. But what happened was Bud Light sales fell 17% over the next 2 weeks compared to the same week a year ago. So now the question, it becomes kind of an ethical one, a moral one, a philosophical one of principles. How do you believe? Are you more interested in the price of the stock and you don't care? Well, that's too bad. But I don't care because, I believe in this issue and it's good for companies to stand up even if they lose money. Or as a stockholder, do you feel like, no, they should just be focused on my stock? The old adage was always that once a company goes public, then it's beholden to its stockholders. And that's being changed now. That is not anymore the belief of many people. Another one you may have saw in the news recently was about Target offering, Pride Month clothing. And the one that was the most controversial, I think, was probably the tuck-friendly swimsuits. And, again, this is where you've got to do your research. Again, what I'm sharing with you here, do not take this all as the truth, but it's just a springboard to do your own research. Because here, AP News, they looked into this. They said that's false, that they are only offered in adult sizes, not in children's. And this was spread all over social media, where the tuck-friendly swimsuits were available in children's sizes. So very, very important that you really look into the details and not just see something on TikTok, Twitter, YouTube, wherever, and just take it as fact. But do your own research. We get into the situation where these things can hurt companies' profits. So threatens of boycotting. You can see on and on it goes. And of course, they reference Bud Light, Nike. We won't even go into that one again, but featuring transgender people. So this is part of, remember, the social part of ESG as the S part, social. If you're interested, here is a website, again, AP News, but just a particular page on it, where you can go do some fact checking, easy for you to say. And it talks a little bit more about how they do it. But anyway, very interesting. So do your own research. Don't just take things at surface value or a title or even, this is an interesting one. Let me show you this before we... And this is an example of how people jump on the bandwagon. So another video on Instagram, which had more than 100,000 likes as at the time of this writing of this article, shows footage of the tag on a one-piece swimsuit. And it claims while it was not specifically in the kids section, it is available in kids sizes. But 100,000 likes. This is the world we live in. Social media dominating, and people doing very little reading anymore to actually research. But the fact remains, how do you feel about the idea of incorporating these type of social variables and socially considered, and I'm going to put it in quotes, socially responsible factors in pricing a stock along with the traditional fundamentals? Because obviously one of the controversial parts of it is, well, who defines socially responsible? People have different opinions on that. So now, as I said at the very beginning of this video, it used to just be numbers, analysis of numbers. And now it's no longer that simple for fundamental analysis. So very curious. Share your viewpoints down below. And I'm looking forward to seeing what you have to say.